joining us tonight to the 2018 Church Tax Guide, sponsored by the San Antonio Baptist Association. It's a pleasure to be here with you. My name is Leanne Crockett, CEO of Bellwether Church Solutions, a company that provides financial solutions and bookkeeping for churches and nonprofits. Authored a book recently called Preventing Fraud in Church Accounting, and have just enjoyed so much this ministry of coming alongside churches. We're going to specifically cover the tax law changes for 2018, and many of those changes are actually a personal family changes. So there's not too many that are actually related to churches, but we're going to discuss those because everybody's always curious. We're going to talk about why churches are tax exempt and what that means. We're going to touch on unrelated business income because that's actually an area where churches have to pay income tax. Fourth, we'll go and talk about workers' tax considerations. That would be your W-2 employees. And lastly, we're going to cover donation tax considerations. So moving along from there, let's take a quick look at the Tax Cuts and Jobs Act, which is what the 2018 tax cuts are referred to. Hopefully you all know by now that they have doubled the standard deductions. For single individuals, it's $12,000 for a standard deduction now, and it's $24,000 for a couple. Charitable contribution limit rose from 50 to 60% of adjusted gross income, and the estate and gift tax exemption doubled. So I don't know if any of us are in the situation where we have to worry about that 22 million exemption, but it would be nice to be in that situation. A big one, the corporate tax rate is reduced from 35% to 21%, and that's why we're seeing so much business growth in the US right now. Churches will pay 21% on unrelated business income, and that's why I've devoted a section to talk about that. In the past, if a church had 2 or 3 unrelated business income ventures, they could net those 2 or 3 ventures together. So if their coffee shop made $100, but their parking lot rental lost money, they could net that for income tax purposes. But as of 2018, those unrelated business items have to be reported separately, and you would actually pay income tax on the unrelated business that earned money. We're going to talk about the possibility, and I say possibility because this is a gray area and there's a lot of discussion and white papers going back and forth on this 21% tax on the cost of providing some benefits to employees. For example, if a metropolitan church has a large parking lot, and so during the week they rent that parking lot out to the business office building that's next door to them, so that's a money-making deal for them. If they allow their church employees to park there, the IRS is saying that this is a benefit to the employee and it needs to be a taxable benefit. And churches and nonprofits are saying, no, 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 this is our parking lot, we own it. And so I'm not really too concerned about that. I think this will get all sorted out in the next few months. I'm paying very close attention to the EFCA, and they're kind of leading the fight to make sure that churches aren't paying some tax on these benefits that they provide employees. To me, parking isn't exactly a benefit anyway. Nonprofits will pay an excise tax of 21% on compensation over $1 million. So if you're paying your pastor over $1 million, then you're going to have to be concerned about that 21% compensation. Individuals, in the future, we will not have any more personal exemptions, but they have increased the child credit to $2,000 a year. So for those of us who don't have children, that didn't help. But do remember that they've increased the standard deductions. So I think all of this is going to net out really nicely and probably still be to our benefit just because of the doubled standard deduction. There are no more deductions for moving expenses to change jobs, and that's talking about moving expenses that the employee, if you move jobs, paid. If you are reimbursed by the employer, or the employer can still take a deduction for those moving expenses. Unreimbursed business expenses are no longer deductible, and we're going to talk about that in a section towards the end. The cost of continuing education and development courses is not deductible. A home office for employees working remotely is no longer deductible, but the key word there is remotely. If you have a business at home, you can take a home office deduction. If you work at IBM and they allow you to work at home 2 days a week, you're not going to be able to take that home office deduction anymore. They have repealed the individual mandate to purchase health insurance, but that's not until 2019. If you'll recall, if a family does not have medical insurance, they pay a penalty of, I believe it's $695 up to a maximum of about $2,500 per family. They have to pay a tax penalty because they don't have health insurance, which makes no sense to me because they couldn't afford health insurance. So how can they afford the penalty? But at any rate, that is going to be eliminated in 2019. So let's talk for a minute about tax exemption in churches. Based on the federal government's recognition that many of the contributions to our society are vital and they are provided by churches and by charitable organizations, is one of the arguments that they made for making nonprofits exempt from tax. But I think even more importantly, it's the government's constitutional commitment to a separation of church and state and the Bill of Rights First Amendment regarding the freedom of religion. At the end of the presentation, you will see a link to a website address where we have several resources posted, and one of those documents is the IRS criteria for qualifying an organization as a church. And it's a very interesting list. The IRS is actually very broadly defines a church, so I hope you'll get a chance to take a look at that document. Churches are tax exempt under Section 5013C simply by functioning as a church. And it's interesting that there's actually no requirement for a church to technically become a 501c3. Churches do not have to file a Form 1023. Now, some churches choose to do this anyway because there are other benefits to being a 501c3, like being exempt from sales tax and that type of thing. Some churches choose to operate under the umbrella of another 501c3, such as the San Antonio Baptist Association. The IRS defines churches, as I mentioned a minute ago, so broadly that it includes religious schools, Christian publishers, Christian TV and radio channels, rescue missions, conventions like the Baptist Convention, the Baptist Association, mission organizations. It is very broadly defined. Even if a church doesn't have a 501c3 official status, though, they should always have a federal employer identification number, an FEIN, because you're going to have that to open a bank account, and you do want to have a separate bank account for your church. You would also need the FEIN, of course, to file any W-2 forms or 1099 forms, which we'll talk about in a little bit. So what are some of the advantages of being a tax-exempt organization? Well, of course, donors can be offered the benefit of a tax deduction for their charitable contributions. Now, I mentioned a few slides back that as of 2018, they've doubled the standard deductions. And there's been a lot of discussion about how is this going to affect contributions, because if you recall, in doing taxes, your Schedule A, which is your standard, is your itemized deduction form. You would put in there your mortgage interest, your property taxes, all of your charitable contributions. And if those amounts totaled more than the old standard deduction, which was $12,000 for a married couple, then you got to take the extra. So if your itemized deductions equaled $16,000, standard deduction was $12,000, you got to take the extra $4,000 off your taxes. And that is an encouragement to people to give, but hopefully, and in my mind, people don't give to church for the tax deduction anyway. We give to church because we want to offer our tithes and offerings to the Lord, I hope. So I'm really hoping that this would be a minimal effect for churches. I know a lot of people in the nonprofit world are concerned because there aren't going to be people rushing on December 31st to make contributions that for tax reasons. But other tax exempt advantages are the special mail rates that churches get, exemption from sales tax, exemption in Texas from the franchise tax, and exemption from property taxes in some counties, most counties. But remember that these exemptions are not automatic, that it is required that you apply for an exemption for sales tax and franchise tax and property tax. I cover that in the next slide as well. You are exempt from paying federal unemployment tax and state unemployment tax if you're a church. You're exempt from the franchise tax, and I have the web address on the slide and on the handout that I provided for you for the church to file for that franchise tax exemption. Just a side note here, every few years, the state will send a letter to ensure that you're still in existence, because they clean up that exempt franchise tax list every 3 to 5 years. And if you don't respond to the letter they send you, then they remove you from the exemption for the Texas franchise tax. So you do want to be sure and open up those letters from the state controller's office and respond. Employees in nonprofits can participate in a 403B tax sheltered annuity or retirement plan. We're going to talk about that in a bit. There is no annual tax reporting requirement for churches. And this always amazes people when I tell them this, other accountants who aren't familiar with church accounting, that there is no Form 990 required for a church. You can be the beneficiary of free radio and television public service announcements, and you can exclude FICA taxes on religious grounds. Very, very, very few churches. It's very rare that there is this exemption from FICA taxes, though, because the church must certify that they're opposed for religious reasons to the payment of employer Social Security taxes. And kind of some of the history of that is the Catholic Church for nuns and priests, where they would take care of them for their whole, until death. And so there wasn't any reason for them to have Social Security because the church always took care of them. So that's kind of the history of why there was an exemption at all for FICA taxes. Some of the limits of being tax exempt are that you must be engaged primarily in qualified religious and charitable endeavors. And that's discussed more on the handout I mentioned to you that's in our resource about what defines a church. You may not engage in unrelated business activities or commercial activities to an impermissible extent. Now that's an interesting phrase to me. And the IRS loves to put phrases like that in code and not define it exactly. But in doing research about that, it's interesting that churches that have had as much as 80% of their activities classified as unrelated have still been allowed to remain tax exempt. So most accountants will say safely you don't want to have over 50% of your income from an unrelated business, but that is not a hard and fast rule. There is definitely a prohibition against private benefit transactions, and we're going to talk about that in just another slide or two. And this is really important, that upon dissolution of a nonprofit, if you have a church that decides to shut the doors for whatever reason, any assets must be distributed to one or more other tax-exempt organizations. So if a church of 1,000 shut down, with a $300,000 in the bank, I'm making up a crazy example, you can't just give every member of the church $3,000. That money has to go to another tax-exempt organization. So let's talk about what this unrelated business income stuff is. The good thing is that all church income is presumed to be exempt from federal income tax unless the income is generated by an activity that is not substantially related to the church's exempt purpose, which is sharing their doctrine, or a trade or business, and is regularly carried on. So unless the income is generated by an activity that is not substantially related to the church, it is considered a trade or business, and it's regularly carried on, it would be presumed to be exempt. Some examples: a coffee shop that's open all week outside the church. Let's say that you had a coffee shop out in the parking lot of your church, and it's open 7 days a week to the public. That would be considered an unrelated business. The example I gave earlier of a parking lot in a downtown area, if that church is leasing out that parking lot to AT&T building next door, that would be considered an unrelated business. And we'll give some more examples as we go along here. Income tax form must be filed if a church does have unrelated business. It's called a Form 990T, and it must be filed annually if there's $1,000 or more of gross income from an unrelated business. And because of the tax law change for 2018, you may have to file several 990Ts if you have various unrelated businesses. I mentioned earlier, it cannot comprise a substantial portion of your organization. And another item that comes up is that rental of property that has debt could be a tax issue, and you really need to check with your CPA about that. The reason being that if you purchased a building and took out a mortgage on it expressly for the purpose of earning income, you knew that you could rent out the major part of this building to a school every week. That's a red flag to the IRS if there's a property being leased out that has debt on it. If the property is paid off, it's not a problem at all, and it's never considered income. So I can't always explain the logic behind some of these things, but that's just the rule. Let me take a little poll right now and see how many of you might have an unrelated business income issue. Okay. Most of you, great majority of you don't have that. We've got a couple with Mother's Day out or preschool programs, which is usually not a problem. I'm not surprised that there's some leasing of the parking lots, because that just makes common sense to do that during the week when the church isn't using it. Interesting. Okay, let me show you the results. So this isn't a big item for most of churches, so we will move on. We will move on then. Okay, thank you. Okay. All right, let's talk about church activities that are not taxed. passive income from dividends, interest, annuities, any capital gains or losses from the disposition of property. Let's, you know, in these days and times, there aren't many churches anymore that actually use a parsonage. So any gain on the sale of that property would not be taxed. Rents from real property, unless there is a mortgage on that property. Royalties, except for oil and gas working interests. And I don't know, royalties are not my area of expertise. I don't even know what else you would get royalties on. But that's, if your church is receiving royalties for some reason, we need to look into that. Something to remember is if volunteers are doing most of the work, let's say I have a thrift shop, the activity would not likely be taxed. So a thrift shop, a church coffee shop, if you have volunteers doing all the work, it is not going to be considered unrelated business income. Anything that is open for the convenience of your members, any of you that might have a coffee shop open on Sunday mornings, or a bookstore at your church open during church worship or church hours, it would not be considered unrelated business. Okay, so donated goods. If you have somebody donate something to you that is sold, that's not considered unrelated business, because it's assumed that the sale is to further the mission of your church. And items costing less than $11 that are distributed via contributions. For example, you have t-shirts. If somebody wants to contribute $20 for a t-shirt, if it's less than $11 item, then you don't have to consider that as unrelated business income. Coffee mugs, things like that. I'll move on here. So let's talk about private benefit or private inurement. I hope this never comes up as a situation in your church. This is when you would have a business transaction with one of the founders, trustees, the pastor, or a significant donor in your church, where you would be transferring church resources to them for less than the fair market value. You know, example might be the church decides to get rid of a van, and the pastor's got 6 kids, and so let's just sell it to the pastor for $1. That would be actually considered, the fair market value of that van is actually considered taxable income to him. Any low interest or no interest loans are considered for private benefit. And anytime there's a mission trip that is extended for a personal vacation, and I'm not talking about 1 or 2 days, but you go to Venezuela, let's not go to Venezuela, let's go to Brazil for a week, and someone decides to spend another week vacation there. That would be considered private benefit if all of the expense for that trip was written off as a donation to the church. And we just want to be careful about those things, because excess benefit transactions are subject to a penalty up to 225%. But more importantly than that, there's a possibility of losing your tax exempt status. So you always want to make business transactions with significant members of your church, pastors, trustees. You want to always document that this transaction was made using a fair market value. So it's important to put it in writing. And if you have comparison values, the Blue Book value, anything like that, that you could use to document the price. Doesn't mean that you can't take the lowest Blue Book value, but something to document how you came up with the number you came up with. Okay? Alrighty, let's do another short poll here about payroll related items. And this one's actually just kind of fun. Well, it's fun for me because I'm an accountant, right? So let's launch the payroll related poll. Okay, does your church pay any workers as contractors? In other words, they're not W-2 employees. Do you use a third-party payroll service? like ADP or Patriot Software, anything like that. Are you all seeing the poll? Yeah, good. And then the last one really was just for fun to see how many of you knew what forms are actually required for every person that is considered a W-2 employee in your organization. Thank you, everybody, for responding. Okay, we've got about 2/3 of the people responding so far, so we'll see. Okay, let's share that. Well, it's exactly 50-50 on churches paying workers as contractors, and we're going to talk about that for 2 or 3 slides. It's a very common area of possible tax issues. Using third-party payroll, let's see, 50% of you use bookkeeping software. Several of you do it manually, and 2 of you use payroll service. Well, lucky you 2, because payroll can be such a headache. And then the I-9 form is absolutely required for every employee that you hire as a W-2 employee. And what's really interesting, even legally, the organization has to keep those I-9 files in a totally separate file from the personnel files. All of your I-9s for all of your employees should be in one file, because if immigration would happen to knock on your church door and say, we want to see your I-9s, you have to be able to just hand them that one file immediately. W-4s, of course. And this is an interesting one. The Texas Attorney General, it is actually a law in Texas that you have to have an account if you have W-2 employees with the Texas Attorney General, and you can go online and set up that account. And every time you have a new hire, you have to submit their name to the Texas Attorney General. And that seems really intrusive to me. But the reasoning behind that actually has to do with wage garnishments. The Texas Attorney General is responsible for making sure child support is paid, or back taxes are paid, or that kind of thing. And so that's why that new hire form is required for employees. So maybe that's great. Maybe we all learned something here. So let's close that down and talk about the church as an employer. It makes all the difference in the world whether you consider someone working at your church as an employee or a contractor. The compensation is an issue depending on if they're an employee or a contractor, because you have to pay payroll taxes if they're considered an employee, right? You have to withhold those payroll taxes. You have to pay employer payroll taxes. So it makes a difference, definitely makes a difference in what you're paying people and how you're paying them if you have determined that they're contractor versus employee. The other thing is benefits. You don't have to give a contractor vacation time, but actually you don't have to give an employee vacation time. But if your policy of your organization is everybody gets 2 weeks starting out, and you're paying someone as a W-2, of course you give them vacation as well. And what I want to talk about here is that it's really a very serious thing about how you classify workers at your church, and misclassification results in significant penalties. And we're going to talk about that, and I'm going to give you some real examples. So defining a worker as an employee versus an independent contractor is dependent on the degree of control your organization has over the worker. Behaviorally, does your organization control when they work, the hours they work, where they work, and how to do their work? If they have a supervisor, if they have somebody telling them how to do it. Financially, whose equipment and resources are being used? If they come in to clean the church and you have all the cleaning equipment in it belongs to the church, they're not bringing in their own, then they wouldn't likely be considered a contractor. And more importantly, do they work only for you? Now, I have to be honest with you, when I started my business, my idea was that any of the bookkeepers coming to work for me, I was going to pay them as contract labor, right? But I went to the Small Business Administration and had a talk with them about that, and they explained to me that that was not the appropriate way for me to pay my workers, that I had to pay them as W-2 employees, and I'll talk a little bit more about that. What is your relationship with the worker? If there's a contract in place, obviously that's probably they may be a contractor. Are they receiving any benefits? They're probably an employee if they are. Do you expect this person to work for you until somebody changes their mind, which may be years down the road? That kind of leans towards a W-2 relationship. And are their services key to your organization? Is this the worship leader that you have every single Sunday that comes in on for rehearsals on Thursday and is there every single Sunday? They are key to your program. That leans towards a W-2 relationship. So the wise thing for every organization to do is to start from the assumption that there is an employment relationship. I would like to also just kind of take a little sidestep here and mention that people misuse the terms exempt and non-exempt employees. When people think that because you're paid a salary, that always makes you exempt. However, the truth is you can pay a non-exempt person a flat salary. You know, maybe it's the receptionist, or maybe it's is the cleaning crew. The difference, one of the main differences between exempt and non-exempt has to do with their function. If they are have a key function in your organization, they're probably an exempt employee, meaning they have specific knowledge, they have a very important role in the organization. They do not receive overtime pay. Exempt employees do not receive overtime pay, but someone that you're paying a flat rate, like a receptionist or a janitorial person, or even you have a child care person on Sundays that you're paying a flat rate per month, those are considered non-exempt employees. And it is important that you have them record their hours every month, every week actually, because if the Texas Labor Board or the Federal Labor Board comes in, you have to show that you are paying a flat rate that is equal or exceeds minimum wage. And the only way to do that is to have documented how many hours they've worked. And the fact is that if a non-exempt employee, let's say that you pay your receptionist $2,000 a month. Wow, I'm probably stretching it there. And they're supposed to work 40 hours a week, but you have a big church benefit this Saturday, and so they're going to put in 8 hours. Well, that means that that particular week they worked 48 hours, and you actually are legally responsible to pay them 1.5 times their normal pay rate for the extra 8 hours. So even though you pay them normally on a salary or flat rate, if they exceed 40 hours in any given week, they have earned 1.5 times overtime. So just want to mention that. Why do we have non-compliance issues with this W-2 versus contractor, W-2, excuse me, versus contractor issue? Because a lot of times organizations just aren't aware. I mean, you know, or you start out small, and so you do have somebody coming in to do music, and you say, hey, I'll pay you $50 a week if you'll come in and do the music, and you just write them a check for $50 a week. Sometimes it's because you want to avoid what I call the taxes, the employer taxes, the FICA and the Medicare that the employer, the 7.65% the employer has to pay for a W-2 employee. The vacation time you have to give them. You know, it's a whole lot easier to just send out a 1099 at the end of the year for the $50 you paid someone every week, multiply 50 times 52, send them a 1099 for $2,600 than it is to keep up with payroll taxes every month. And there's no quarterly tax forms required at all if they're just contract workers. So those are some of the reasons that we have issues with non-compliance. But please, please know there's 100% penalty for miscategorizing workers. And the thing is, you know how most, this comes up as an issue for most churches, is that somebody files unemployment. Somebody is laid off or fired, and they go and file unemployment. Well, a church doesn't have to pay unemployment taxes, but then that starts somebody looking at, well, you don't have a W-2. We don't have, there's no payroll taxes recorded for this person. Why aren't they paying payroll taxes for this person? So that's kind of where that investigation may start. I've worked with one nonprofit recently who was paying all of the people on their staff as contractors. And it actually came up through, this was not a church, it was a nonprofit organization, but it came up through a grant audit that they weren't paying people as W-2 employees. And the IRS literally almost repossessed their building, and they ended up having to pay, I think they started out with about a $45,000 bill to the IRS for back taxes, including penalties. So it's just something you don't want to do. You know, it's a myth also that part-time or seasonal workers can always be paid contract labor. That's just not true. If they only work on Sunday mornings from 8 to noon, that's fine, but they're considered an employee if the things that I mentioned earlier, the behavioral, you know, you're saying they're working at your place of business, you're telling them the hours they have to work, they have to follow, and especially if you've done a background check on them, it's very obvious that they're an employee. Okay, let's see. I see a question here. If you have it in also contracts, how should you be paying them when they do contract work? Ooh, you have a W-2 employee who also contracts. Well, if the contracting is actually a business that they do for other people, then it's okay to pay them as a contractor for that work if they're sending you an invoice and that is an ongoing business that they have. I probably need to know a little bit more specific about that particular situation. So if you want to type in a little bit more, I'll try to get to that at the end, okay? Let's see. Contractors, by the way, my rule for my clients is I don't pay anybody, any vendor, if we don't have a W-9 on file. That is the only way to know whether the vendor is a sole proprietor, an LLC, a partnership, or a corporation. And by law, you have to provide a 1099 at the end of the year to anyone you pay over $600 to during the year that is a sole proprietor, an individual, an LLC, or a partnership. The only organizations you don't have to send a 1099 to are corporations. And you can't know that if you don't have the W-9 on file. And you don't want to get to the end of the year, look at your vendor list, see that you have a dozen people that you've paid over $600 to, and you don't have any information to send the 1099. So it's just good best practice to have that W-9 form in your hand before you cut them the first check as a vendor. By law, you are required, if someone appears to even be a contractor, you are required to withhold 28% of their payment if you don't have a W-9 on file so that you can send them a 1099. That's usually kind of a surprise to people and not honestly something that very many businesses or organizations keep up with. So let's see. I've mentioned the cleaning crew several times. If this is someone who only works at your church, you know, they come after hours or weekends, so we're paying them contract. The fact of the matter is, if they come every week and they don't do this for anyone else, they don't have a business, Joe's Cleaning Service, they are probably a W-2 employee. The musicians in your worship team, even though they don't play every week, even though they're part-time, The IRS in several cases has ruled that they're actually employees if you're paying them. They're not contractors. Your child care workers is a very common one. A gray area is the police officers. A lot of churches these days have police officers on Sunday mornings, and the IRS has kind of ruled both ways on that as to whether or not you have to consider them W-2s. I have a very high risk level. When it comes to the IRS, I would probably not pay them as a W-2 employee because it is a gray area. That's kind of depends on what your tolerance is for risk. But why do churches have challenges when it comes to compensation for their workers? Primarily, it's because it's hard. It is hard to determine the correct level of compensation. If you pay someone too little, they're working so many hours that they're getting less than the minimum wage. The Fair Labor Standards Act kicks in, and you can have issues with the Fair Labor Standards Board. If you're paying somebody too much, then that's considered the private benefit or private inurement that we looked at several issues, several slides back, and that jeopardizes your organization's tax exempt. So what's my point? My point is that you need to document the compensation that you're paying people, including the fringe benefits. You need to document it. You need to properly report it for taxing purposes. And we're going to talk a little bit about maximizing certain fringe benefits in a minute. But just remember that just because you pay an employee a salary does not make them exempt. And you should keep time records for all non-exempt employees to prove that they are making at least minimum wage. I'm reading it. Someone asked me that prior to previously the bookkeeper was putting the payment in with their W-2 pay. Pay them with a check person as a miscellaneous income. It's been tossed. So I think you're asking about a worship type person. I'm not quite sure I understand your question, so maybe you could give me a little bit more detail, and I'll try to answer that also at the end then. Thank you very much. I appreciate you asking it. So what is reasonable compensation? It's what would ordinarily be paid for like services at a like organization under similar circumstances. I didn't make this definition up. The IRS made this up. So, you know, what is the pastor in the church down the street making, or the church in the next town making, or, you know, it should be something comparable. There's lots of surveys out there. The EFCA provides surveys for salaries. You know, as people say, Google it. You can avoid any penalties about private benefit by using comparability data, having an independent committee, people that don't report to the persons whose salary you're determining, and adequately documenting it. And that's the main thing, is adequately documenting it. And in the resource link that is on your last slide, you're going to see a form that you can use to actually document people's salaries and their whole compensation package. So that's just something. And you know what? I really want to encourage you to look at it every year. You know, it's so many times it happens when someone's hired, they look at their they actually document their compensation package, but it never gets updated. So be sure when it's budget time of the year, actually redo the compensation documentation for those persons in your church that you need to. Alrighty, so what about deferred compensation? What about the 403B plan and the 401k plan? So 403B plan is essentially the same as the 401k in that you are not taxed on the monies that the church donates to this plan until you start taking money out of the plan. So churches can defer up to $18,500 per year for pastors. In compensation, a pastor age 50 or older can contribute an additional $6,000 per year. And any salary reduction contributions count against the annual deferral amount. For example, if an employee contributed $18,500 to their plan, that would use up the entire deferred compensation allowance. So a 403B plan, you don't pay taxes on now on any of the employer contributions to the plan. It has to be a written plan. It has to be an annuity contract with an insurance company, or a custodial account in a mutual fund, or a retirement account with Guidestone. It has to be something that the person cannot access without going through some legal documentation, because they would pay a penalty for taking any of that money out. For those of you who printed off the document of the slideshow, I want you to just give you a heads up. I am going to skip the next 2 slides in your handout on housing allowance, but I'm going to come back to them later. I just decided at the last minute I wanted to discuss that at a different time. So let's move on about the 403B plan. As I already mentioned, it must be a written plan, and reduction arrangement is just another phrase meaning a 403B plan. It must be a written plan, and the employer contributions are excludable for a minister from federal income tax and Social Security purposes. Now notice it says employer contributions, okay, not employee contributions. Employer contributions are excludable. So what are some other fringe benefits and tax issues? An employer-provided cell phone is not considered taxable income normally, because even if it's an employee reimbursed cell phone, it's not considered taxable, because these key persons in your church need to be able to be contacted at any time. They do put the wording in the IRS code that it must be primarily for non-compensatory purposes. All that means is you can't say to the pastor, your salary is $5,000 a month, but we're only going to pay you $4,900 a month and give you this phone worth $100 a month to compensate you. So it's just really a matter of wording and documentation again in your compensation package. You want to make sure that when you're reimbursing someone for a cell phone they have on their own plan, that you're not exceeding the actual expenses. You need to have the pastor or associate pastor bring in their phone bill and put a copy of it in their personnel file. And again, it's just not a substitute for any portion of their wages. Medical, dental, and vision insurance. The employer-paid premiums are excluded from federal income tax for employees. They do not have to pay income taxes for medical, dental, and vision insurance. That is employer-paid. Employer-paid directly to the insurance company. It's interesting that this used to be the law, and then the last couple of years it was not the law, and now it's the law again in 2018, that if you reimburse an employee for insurance premiums, and an example of that would be your pastor's wife works full-time for UPS, and they have a great insurance plan, and he's on her plan. You can now reimburse that pastor for the portion of his wife's insurance plan that covers him. And that is allowable tax-free benefit now. Now, there is a maximum of 50 employees in the company or in your organization. If there's more than 50 companies, different rules and laws come into effect. You do have to document what the spouse is paying for the pastor's portion of insurance, and you must offer it to all your full-time employees. A lot of times for pastors, of course, part of their benefit package is that you're paying for he and his wife and his children's insurance. So you would actually be reimbursing them for the total amount of his spouse's insurance package. That's a pretty nice benefit. But it's normally also less expensive than what it would cost the church to get tax for that family on their own. So it's kind of a win-win situation usually. I already mentioned this earlier about the fine. I call it the penalty for not having insurance. There's the actual amount, $695 a person up to $2,000 for a family. Isn't that terrible? They can't afford insurance, so we're going to charge them $2,085. I actually did taxes for a young family last year that I had to add that $2,085 to their tax return, and it physically made me ill. So I do hope that that elimination of that next year still holds up through all of our political changes, whatever goes on in the next election. Disability insurance paid by the church is non-taxable to the employee. Sometimes part of the employer package to a pastor is, we're going to reimburse your self-employment taxes, you know, and we're going to talk about this in a couple slides away, but that pastor has the strangest tax status. Unlike any other individual in the U.S., they're considered dual status tax individuals, which means they're employees, but they're not employees. They're employees, but for FICA and Medicare, they're considered self-employed. So they're penalized by having to pay the full 15.6%. So sometimes a church says, your salary is $50,000 a year, but we're going to pay you an extra, what would 15% be? It'd be an extra $7,500 a year to cover your self-employment taxes. Well, guess what? That $7,500 is considered a taxable benefit. So it's kind of that never-ending cycle of, we'll give you money to cover your taxes, but then we're going to tax the money that we give you to cover your taxes. So it gets a little complicated there. Moving expenses, for example, for a pastor are non-taxable to him if they're paid under an accountable expense plan. We're going to talk about what an accountable expense plan is in a minute. And that his move was required for business purposes, which of course, why would he be moving, I guess, if it wasn't for business purpose, but that's part of the code. How's everybody doing? Is everybody hanging in there okay? Can you raise your hand if you're still awake? Let's see if anybody raises their hands. Ooh, oh, I'm so excited. Some hands are raised. Awesome. Thank you. Thank you for hanging in there. We're getting there. So what is this employee business related expense and an accountable reimbursement plan? Again, I have a link on my resource page about defining an accountable reimbursement plan. I cannot emphasize enough that you have to have an accountable reimbursement plan. It's very easy. It's not a big deal. You're probably already doing it. It's to be excluded from taxable income for employees. Any reimbursement of expenses to them has to be documented to be required for a business purpose, substantiated with receipts or mileage logs, and if you gave them an advance for a business trip, you have to have a policy that any monies not spent on the trip are repaid to the church within 60 days. That's all it is. It's not hard. But I want to tell you, I have one client that they made an arrangement. We're going to give you $200 a month for gas. That is not a reimbursable plan. The employee was not documenting their miles. They didn't have a clue how many miles they were actually driving. Honestly, they were probably driving more miles than that every month. But that $200 is taxable income because it was not an accountable reimbursement plan. They were not turning in mileage logs. I have the rate there, 54.5 cents per mile is the rate for 2018. On trips, you are allowed to pay per diems rather than having the pastor keep track of all his receipts. And there are some guidelines that go along with per diems. You can't pay him $1,000 per diem if he's going to, Columbus, Texas. It has to be a per diem that's in line with what the expenses would be for the area that the person's traveling to. But if you have that in writing in your organization, in your policies and procedures manual, which I'm sure all of you have, that every time you take a trip, we're going to give you $150 a day per diem to cover your hotel and all your meals. That's perfectly fine to do that. That still falls within an accountable reimbursement plan. But for like local mileage around town, they need to have a log. Taking somebody out to eat, they need to have a receipt. They need to have the names of the people that were with them. They need to have a one sentence or a few words explaining what the purpose of the meeting during lunch was. And by the way, just so you know, and I'm going to go ahead and put up my next slide because I just thought it was funny. The mileage reimbursement for volunteers is only 14 cents a mile. Interesting, huh? About those loaves and fishes, could I please get a receipt for tax purposes? That's what we have to train all of our church employees. They don't get reimbursed if they don't bring a receipt. That's just all there is to it. Because do you want to keep track of all the taxable income that you've paid out to people because you reimburse them with no receipts? I don't think you want to do that. So let's make sure everybody gets receipts in. So in the spring of every year, San Antonio Baptist does this wonderful thing of having a tax seminar just for ministers. And that goes into lots and lots of detail about this dual tax status situation that pastors find themselves in. So I'm not going to cover that in detail in this seminar, but I will touch on it briefly, that there are two areas that must be met to classify someone as a minister. That gives them some of the special tax treatments that we're going to talk about. First of all, they have to be credentialed. They have to be ordained, licensed, or commissioned by your denomination. And it's important that you have a copy of those credentials in their personnel file. Okay? And then they need to perform these functions: administering sacraments, conducting worship services, they must be considered a spiritual leader by the church. They have to perform management services for a religious organization. They don't have to necessarily do all four of these things, but it's nice if they do. So you want to make sure that your pastor meets these two requirements to be considered a pastor. And if they do, then you can offer them a housing allowance. Now, I find this very interesting, that housing provided for the convenience of the church, ministers or non-ministers, is exempt from income tax and FICA tax. So if you have a parsonage that's available for the church and you're I guess your worship leader, it was convenient for the church to have him next door so he could run over and lead worship at lunch every day. I guess he could be tax exempt from that. It's interesting, huh? But most cases today, the pastor actually owns his own house or he's renting a house. And in that case, he is entitled to receiving a housing allowance that's the lower of the amount that was officially designated by the church, or the amount used for from his current income to provide a home, or the fair rental value of the home, including utilities and furnishings. So the lower of those three items is what he's entitled to. So one of the things that I always suggest, because it is important that you document in writing prior to any housing allowance payment, it has to be in writing before you make the first payment. Go big on the documentation. He'll be allotted the maximum of, and you may say that monthly he's going to receive, $1,500 a month housing allowance or $5,000 a month housing allowance. And if that's the lower of those three things, then you're fine. If his actual expenses exceed that, and that still ends up being less than the other two things, you can pay him more. I hope that makes sense. The main thing is going back a slide, the amount officially designated by the church, the lower of that, or the current amount he's actually paying to provide the home, and that includes utilities, including the phone bill, the cable bill, the electricity bill, the water bill, all of that, the yard work, or the fair rental value of the home, including utilities and furnishings. So it's pretty broad. Okay. Okay. Let's see here. Credit cards, anything needed besides this? Oh, somebody's asking a question about taking people to lunch. I'm sorry, I didn't see your question earlier. Taking people to lunch, if you need anything besides the receipt, yes, they do. They need to put the names of the people that were at lunch and the reason that they needed to have this business conversation or whatever it is they talked about. They do need to document that. And I'm not seeing that. Okay. I'm sorry. How do you handle a pastor that lives in a parsonage but also receives a small housing allowance? Well, you would have to determine what the fair market value of the rental is for that parsonage and add to that what the utilities are that he's actually paying during the year. And then you would, that would be his housing allowance, would be the value of the parsonage plus the utilities that he's paying. Now, I don't think you really have to worry about that, Stephanie, as far as his income tax goes. Let me go ahead and explain a little bit more, and maybe that'll make sense. Hopefully it will. If not, we'll talk about it some more. So why do pastors, what is the big advantage to them having this housing allowance? Well, they don't pay federal income tax on a housing allowance. It's an awesome benefit. However, that housing allowance is included in their self-employment tax. They do have to pay FICA and Medicare on that tax calculation. But this is the place that so many churches make a mistake, is you do not withhold FICA or Medicare on the pastor. He is a self-employed dual status person. He has to pay his own FICA and Medicare. You never, ever, ever withhold FICA or Medicare on a pastor who's receiving a housing allowance, or a pastor at all, and as long as they're a dual status employee. So I do want to mention briefly that in the Wisconsin District Court, there was a decision in 2015 that they ruled against pastors getting housing allowances. And that was overruled in 2016 by the appeals court. And the organization that originally filed it filed again. And it's now pending as of 2018. And so everybody's kind of waiting on that decision. And as you know, in the United States, with the common law means that they use prior court cases as precedent for future rulings. So, you know, there's kind of, everybody's kind of watching to see if this housing allowance benefit is going to go away. I would be shocked if it went away, but we'll see. I mentioned pastors have the federal income tax exclusion of their housing allowance. They actually, in the past, have had a double benefit of they can take their mortgage interest and their property taxes as itemized deductions on a Schedule A, and they also get the housing allowance from their federal income tax. But with the increase in standard deductions, that I'm kind of doubting that they're going to have that double benefit anymore, because they'll just be taking the standard deduction, which might even be better for them, actually. The exemption of clergy compensation from mandatory federal income tax withholding. If a clergy opts for you not to withhold federal income tax from them, they can do that. They can voluntarily ask you to withhold it for them, but they are not required to have that withheld from their paychecks, because then they would pay quarterly estimated taxes. Remember, their dual status, they're considered employees and independent. So they can ask you to withhold federal income tax or not. You still never withhold the Social Security or the Medicare. Clergy can be exempt under very limited circumstances from the self-employment tax, and they have to do this in the first 2 years of practicing their vocation. And there's some pretty strict guidelines for opting out of the Self-Employment Compensation Act or Medicare and FICA, and once they opt out, they can never opt back in. So if you have somebody that's interested in that, you're going to probably want to have them talk to a CPA about it. And treatment of clergy, yeah, we've talked about this. You get the point that pastors are self-employed. So on your W-2 for ministers, you may or may not have anything in the income tax withholding box, because that's voluntary and that's his decision as to whether or not he's going to have you withhold income tax. You should never have anything in box 4 and 6. It should be empty. And you do not have to put their housing allowance in box 14, the other box. That's optional. It is the pastor's responsibility to report his housing allowance on his own income tax return. It is not your responsibility to have to put it on the W-2 form. W-2s have to be issued by you for any employees in the church by the 31st of January. And I put a question mark there for the 1099s because it always also used to be the 31st, but in 2018, they moved that date up to, I think it was January 20th. You had to have your 1099s out. And I researched this for 2019 to see when this coming January we would have to issue 1099s, and they actually had not published a date yet. So I can't tell you, but keep your eyes and ears open for that, because it may be sooner than the end of the month, and they penalize you if you're late. So you don't want to be late getting out your 1099s. Remember on your payroll taxes that you do have to make a monthly deposit for FICA and Medicare, and actually federal income tax as well. That should be on there as well. It's due by the 15th of the following month. So at the end of January, you have 15 days to calculate what your payroll taxes were at the employee and the employer portion, and you pay that in to the government by February 15th for the month of January. And then quarterly, you have to mail in or e-file your 941 report that says, I made these payments on February 15th, on March 15th, and April 15th. I made these tax payments, and this is the amount that was due. I paid the amount that was due, so clear my account. And that 941 form is due by the last day of the month following the quarter. And it's interesting to me, this is not an uncommon error that churches forget to mail in their 941. What happens then is maybe 18 months later, because the IRS is very slow, they send you a letter that says, we have a credit balance for you on the second quarter of 2016. Why do we have this balance? And you look, and it's because you didn't send in a 941 for the second quarter. Now, you would think common sense wise, they would know that you were paying your payroll taxes, but they don't. And you send in the 941 for the second quarter of 2016, plus then the penalty they're going to charge you because you didn't send it in on time. So please know that this is really important, because church officers and employees can be personally liable for payroll taxes that aren't withheld or aren't paid. Either one, aren't withheld or aren't paid. So it's important that you get your payroll taxes payments made on time, and you get your 941s sent in on time. So what are some common problems that churches have with the W-2s? They forgot to include the value of non-cash payments, taxable fringe benefits. And a fringe benefit is a form of pay other than money for the performance of services. Any fringe benefit provided to an employee is considered taxable income. And probably the most common type of fringe benefit in that would fall in that category would be maybe having a company car or a church van to drive. That could be considered a taxable fringe benefit. Or if you provide clothing that's suitable for streetwear, you have, I don't know, if you had a school and you gave the teachers uniforms to wear, I guess, that could be considered a taxable benefit. Business expense reimbursements that are not under a non-accountable plan. In other words, they haven't provided receipts, but you reimburse them for expenses. That would be considered taxable income. You want to exclude housing allowance from the W-2. You want to exclude any business expenses that were paid under an accountable plan and exclude any church contributions to the 403B plan. Those are not included on the W-2 for the pastor. So I just threw this in for good measure, and we did the little poll earlier, but for every employee in their personnel file or in the I-9 file for each employee, well, there's an I-9 file for the whole organization, but you want to have in it an I-9 form for each employee. And then in the personnel file, you want to document that you have registered this new employee at the Texas State Attorney General. You have your W-4 form. If there's a housing allowance agreement, you want to have that copy in the personnel file. And any insurance or annuity documents, if they've signed up for Guidestone annuity, or if you're reimbursing them for medical insurance, you want to have a copy of the bill from their spouse's provider. Of course, you want to have all that in their personnel file. And for contractors, I mentioned earlier the W-9 form. I usually keep just one file on my client for my clients of W-9s. So I just keep it in alphabetical order by vendor, and all the W-9s are in one file. That way I can quickly see when I'm getting ready to make a payment. I can flip through it real easily and see, oh yeah, I have a W-9 on that company, so I'm ready to go to pay them. But some common non-compliance issues related to employers or workers, employees or workers, I should say, is that the housing allowance wasn't documented and it wasn't updated annually. They included it as income. They have never documented the credentials of a pastor. I mean, if you can't trust the pastor, who can you trust, right? I mean, I'm being silly, but of course, when a pastor comes from another church, you know that they're credentialed. And so sometimes you just don't think to ask for the credentials, but you should have that documented in their personnel file. And not including taxable fringe benefits. That's a common mistake of, for example, my organization that was paying $200 a month mileage, that should have been $2,400 worth of taxable fringe benefit included on the W-2, excuse me, the W-2. So, and oh my gosh, this is so common where they pay the pastor as a regular W-2 employee, just like they pay everybody else, which means, of course, you're paying their FICA and Medicare, which, as I have probably dwelled on way too long, is not something that you would pay for the pastor. Okay, let's take a short break to kind of wake ourselves up and give you guys something to do. And we're going to launch a poll on one question poll. And I know you're all going to say yes. Does your church have a written gift acceptance policy? And we are just about done, so hang in there for a few more minutes. Does your church have a written gift policy? Honestly, I'm going to be very surprised if and excited about those of you who say yes. I'll be surprised if you do have it, but let's see here. We've got 21 people participating tonight. So far, half have voted, and it's about one-third yes and 2/3 no, which I'm really surprised it's 1/3 yes. Let's see, anybody else want to vote before we close it out here in 5 more seconds? Okay, let's post the results. All right, you can see of those of you who responded, 2/3 do not have a gift acceptance policy. You know, I did not put an example of that in the resources, the resource page that I created, but I think maybe I will. I'll go back and add that, because it's an important thing to have, so that when somebody does try to give you an inappropriate gift, and there can be inappropriate gifts, you have something in writing to back you up to say, we're so sorry, but we can't accept that gift. And let's go into that. Okay, everybody, you want to stretch for just a minute, just a few seconds, stand up and stretch. And I think I need to, actually. You ever do that? You sit for so long and then you can't stand up. We've just got a few slides left to go. Y'all are doing great, and I appreciate it so much. Okay, let's talk about charitable contributions. What are the tax implications about them? First of all, the donor can claim a tax deduction for any money or material goods donated to your church. I'm hesitating because, of course, that's now that the standard deduction is $24,000. It's not going to matter to them if they donate it, unless it's quite a substantial amount. But this is interesting. Donor service and time. One of your members is a plumber, and he donates his plumbing work to the church, is not a tax deduction for him. Isn't that something? Now, he could send you a bill for, well, I started to say $50, but no plumber would send you a bill for $50. Let's say $500. And you pay him $500, and he turns around and donates the $500 to the church. That would be a tax deduction for him. But his time and service is not tax deductible to him. Deductions have to be claimed in the calendar year given. So that check in December has to be postmarked by December 31. So even if it is received on January 3rd, you need to book that in December business and give them a donation for December. Pledges are deductible in the year paid. I know a lot of churches do pledge drives in the fall, and somebody may decide to pay it all in December, so it would all be deductible this year, as long as it's paid in this year. This is the important thing. Charitable contributions must be given unconditionally and without personal benefit. They cannot designate to people. They can designate to purposes, but it is oftentimes the IRS does not consider donations designated to people to actually be a legitimate contribution. And we're going to talk about that a little bit. These are called earmarked gifts. And earmarked gifts are donations directed to certain individuals, and they call these pass-through transactions or conduit transactions versus being a charitable contribution. Or if a donor just puts too many restrictions on a donation so that they are controlling the use of it rather than the church controlling the use of it. And non-deductible or earmarked gifts are not tax deductible for the donor. I mean, and the key question, and you know, this is somewhat, the word I just lost my word, but it's somewhat judgmental or by the IRS, is who ultimately controlled the funds. That's who determines who the beneficiary is. So if the church doesn't ultimately control the funds, they're not considered the beneficiary, and it's not a tax deduction to the giver. So let's talk about that more. What about contributions to support missionaries or a certain mission organization? you know, it has to actually pass 2 tests to be considered a contribution. And it's all about the wording of the solicitation. If the giver's intent is to benefit the ministry, this is best clarified by the communication by the ministry at the time of the solicitation. And I have put some recommended language out in my resource for you. For example, the contributions are solicited with the understanding that, you know, the church has complete discretion and control over the use of the donated funds. Sounds very legalistic, legalese, doesn't it? But that's just to cover the church to if you're giving a receipt to somebody for a donation, you want the IRS to have considered it to be a donation. The second test that a donation has to meet is the discretion and control test. And that's about the church's obligation being clearly defined, clearly recognized by the fact that the church has a budget line item for missions. The church has a budget line item for benevolence. And so if on this Sunday, you know, let's say we had someone in the church that whose home burned down, you know, it's really best that a fund be established at a bank for that family and that donations be made to that bank. If the church decides that they want to give benevolence to the family of $5,000, that's fine for the church to do that, but it's not fine for someone to designate the money just for that family, to write a check out and put in the memo, you know, for the fire of the Jones family. If the giver is controlling where the money goes, that gets into a gray area with the IRS, and it might be considered a pass-through donation. Another way that the church documents that they have discretion and control over the funds is consistently having the governing body of the church review and monitor the programs and having policies and programs. And that's where the giving policy, I asked if you have a gift receipt policy, that's where that comes in. And another thing about, you know, a lot of times people like to give love offerings to the youth pastor or someone, the worship leader or the pastor. But by earmarking that gift to that person, it's considered taxable income to that person. There's can be no commitment that the contribution will be paid to that particular person. And it's perfectly fine for someone to give a love offering to that person, but write the check out to that person and give it to them. You don't want to pass it through the church. The church doesn't want to abet and abet the person in getting a donation for something that was actually just a gift to another person. What about short-term mission trips? You know, how can those be paid for? Well, you know, you can have a line item in your general budget for mission trips, and everybody in the church just gives to, you know, you can have a special offering that says, hey, we're going to take a special offering today for the mission trip to Peru. And that's perfectly fine because the church has this trip plan. They've got it written in their documentation that they have a mission fund. You know, a person can fund their own trip, and even, you know, they make a trip donation to the church, and the church can even keep track of that by individual. But the thing is, if the person can't make the trip because they get sick, because a wedding comes up or something, it's not refundable to the person. And still, of course, you know, I just started to think of a reason why maybe you could refund it, but I'm not going to say anything about that right now. Excuse me. If I determine that, I'll send you all an email. Others may give to the mission fund and take a tax deduction, and it is actually okay in this situation, and I've put the actual wording for a fundraising letter in the references, the resources, to preference a gift for a particular individual on the trip, as long as in the letter it is clarified that should this person not make the trip, the money's not refundable. So that falls under the intent test to benefit the ministry, and discretion and control test again, that the church actually has discretion and control over the funds. So the church is responsible for acknowledging and reporting gifts. If asked, they must provide a receipt for any gift valued at $250 or more. Most churches acknowledge giving on a quarterly or annually basis. All of these acknowledgments should have the giver's name, the cash amount. If somebody donated goods to the church, you give a description of what they donated, but you do not value that donation, the material donation. That's for the individual to value themselves on their tax return. If they donated 3 boxes of supplies, then you just give them a receipt that says thank you for the 3 boxes of school supplies for the Sunday school. Statements as to whether the ministry provided any goods or services in exchange. If somebody writes you a $100 check for the Mother's Day banquet and the cost is $20 a plate, then they've donated $80 to the church, and $20 of it is actually to pay for the lunch. So you would not give them a receipt for $100. You give them a receipt for $80. The date of the donation and the date the acknowledgement was issued. As I mentioned, some churches give receipts quarterly and annually. Some organizations, other organizations, every month, if you give them a gift, they give you a receipt. There is no specific form. The information I've mentioned here has to be on whatever receipt you give them, but there's no specific form to give the donors unless they give you a boat, a car, or an airplane. And then there's a specific form you have to give the donor. If somebody writes a check that's payable to another organization, like they give you a check that's payable to the food bank, you do not give them any receipt from the church, because the food bank should give them the receipt. So if they know that we're giving money to the San Antonio Food Bank or whomever, and they write that check actually out to San Antonio Food Bank, you just give that check to San Antonio Food Bank and they write the receipt to the donor. And gifts that are made, like I said earlier, to a needy individual or an employee instead of to or for a ministry are generally not qualified as charitable contributions. And I know that's a really difficult area for churches. I really don't even want to be in the position. And so that's where a written gift policy comes into play that says, any checks that are written to an individual are considered taxable income to that individual and will not be considered a taxable deductible donation by you. That's where that written policy comes in. What about quid pro quo gifts? This for that. We'll give you this and you give us that. And that's going back to like the banquet that I talked about. If a giver receives goods and services that approximate the value transferred to the ministry, that is not a taxable gift. You are required, even if a payment over $75 is made for a banquet or for a dance or whatever. Not a dance. I don't know why I said that, but anyway. Some other event with explanation if there's any difference between the amount paid. So the exact example of the $100 I mentioned for the banquet. They gave you $100. The supper's only worth $20, so you're going to give them a receipt for the $80 difference. Okay, and please note this next slide. It is okay to say no, thank you. It's okay to say, I'm so sorry, but we can't take this check. It's most important when it comes to somebody trying to give you, for example, property. That's a wonderful thing, but make sure that there are no unintended consequences. Does the land have an environmental liability that you don't know about? Are there gas tanks buried under the land? Are there back taxes on it? Are there any mechanics liens on the land? You need to do your due diligence before you just accept gifts like that, or gifts that have too many restrictions or are earmarked. You might want to just say, thank you very much, but we can't do the administration required to take care of recording this gift. So that's just that type of situation. And lastly, the biggest non-compliance issues with donations come with not receipting properly, not putting the appropriate items that are required on a donation receipt, not considering the consequences of non-cash gifts, not doing your due diligence and thinking about the liability that might be associated with a gift, and restricted gifts, as I've mentioned over and over again, for benevolence or for staff people. I want to thank you so much for participating in this webinar tonight. I appreciate your attention, and I want to bring your attention to the resources that I've used. The Church and Nonprofit Tax and Financial Guide by Zondervan is an excellent resource for your church. Again, the IRS website is an easy website to get around, and Publication 517 provides lots of information. And on the bottom link there is the URL address for the resources that I've mentioned throughout the webinar. If you need any forms or sample letters that I have mentioned during the seminar, please go to bellwetherchurchsolutions.com 2018 tax guide to find those.